right, good morning. I have turned it on just a minute early. So I will get started here in a minute. Give me just a minute and I'll get us rolling. Get this over here saved. All right. Get our calendar up. Turn my volume down over here. All right, let's get my goodies up here. Let's do this here. All right. All right, we are up and running. 6:30 a.m. Central Time, where I'm at, here in Kansas City, in the heart of the U.S. And it is Thursday morning, January 15th. It's already halfway through the month. I swear the time just flies. So as you guys pop on, just let me know you're here. Say hello and in the chat. And let me know if you're looking at anything specific. As always, I do have some top setups to roll through. And take a look at the economic calendar over here. I like to check Yahoo Finance just to see what the top headlines are. Just more so to see where the liquidity might be going. A lot of it has to do with stocks, but a lot of this feeds into the indices, gold and silver, Bitcoin that I like to trade now and then, and obviously the US dollar to a point. So it's always good to start there. It's good to go over to X and follow. I only follow specific traders or, top people that move money, and as well as some, obvious prime ministers, premiers, people like that move markets, guys. It's just a good idea to do that. And that's really all I use my Twitter for, or X, is just to follow, just basically to help out my trading. And this is, and I'm talking about my personal account. So yeah, that's what I use it for. I don't use it necessarily to be browsing around or, social media as much. That's what I use Facebook for. All my friends, family. Okay. That's where I do the bulk of my communicating is Facebook Messenger. So when it comes to X, yeah, that's specifically what I use it for. It's just nothing more than an additional news piece, a news source. But I also like to use Financial Juice. Financial Juice is probably my favorite that goes specific to what I trade, which is obviously Forex up here and indices. It's just nice to be able to get all those instant article releases from sites like FX Street, Forex Live, a couple others, just to see where the main things, see what's moving or see what's potentially about to move. I used to use this site quite a bit, FX Street, when I'd write up my news articles. I just go in here to the news section specifically for the FX market and then just take a look at all the different currencies. Okay. I mean, it would always single them out. It always singles them out. Dollar Swiss, gold, there's Kiwi dollar, okay, pound sterling. And then it's just nice to be able to have these reports here to go in and see what they're talking about. Dollar yen, okay. A pretty hot ticket right now because of the potential for intervention, right? We are at that 158, 159, 160 level. And historically, if you go take a look on a chart, there's oftentimes a lot of big moves away from those price points. So it's just it's that again, that's what I love about FX Street, sites like FX Street. What does this article say, by the way? Okay, 158 half. European session outlook remains uncertain. Yeah, you know what? You want to talk about the best trade ever? Talk about intervention trades. Let's go take a look at the dollar yen. I'm kind of curious. Go to a daily and just turn off all my drawings for a second. Zoom all the way out. Okay, look at this. Last time we were up in this territory, what happened? Big old push away. Okay, this back here in July of last year. I should say July of 24. Got pushed actually above 160, but then just fell like a rock. In all these cases, it drops about 20,000 points, 20,000 pips, 160 all the way down to 140. Well, guess what, guys? We're up here again. I mean, hey, we're close. Where are we at exactly? Have we touched 160 yet? I don't think we have. Interesting to see what happens. Uh-oh. Hold on a second. Is my connection unstable? There goes my stream. Get this back up. Window. Share. All right, I think that's back up. There we go. So, yeah, good times. Good times up here in the 160 territory for the dollar yen. Let me just reset that. Yeah, and it hasn't. Let's see here. I'm just going back in time. Yeah, way back here in 1990. Okay. 1990, we got to the 160 level. We're looking back here. This is a weekly chart. Just big, gigantic drop. Hey, prior to that, we did a little dance around it, looks like. Okay, over here. So a little do-si-do below, a do-si-do above, and then we finally broke. So 160. I can tell you there's a lot of people that are putting in the short sell orders up here, more like position type trades. Okay, longer term swing / position trading, just like they did back here. Hey, back here in January of 2025, again, July of 2024. So it's just a pretty hot ticket of an area. Hey, back here we only got to 152, but so yeah, dollar yen going to be interesting. I mean, if you're looking at a weekly chart, let's see here. I don't know if I have. Well, actually, let's do this. Yeah, there you go. That's not really what I wanted to do. Well, what I was trying to do was just something like this. Well, you guys see the top. You see the yellow box at the top. You see this blue line down here. So are we in nothing more than just a big, gigantic sideways trend? Okay, if we're looking at a weekly chart, if we're looking at a monthly chart. Okay, there's a monthly chart. I mean, this is a pretty picture right here. Clear lows, so clear support. And clear top, clear resistance. I mean, it's not that clear. I guess this one is peaking a little bit. But what I'm saying is we are pretty high on the curve. Pretty high on this overall curve. You guys have heard me talk about curve analysis, right? So on a monthly chart, we're high on the curve. Hey, Mr. Peeps. How's it going, boss? So anyway, yeah, fun times in dollar yen land. See for that potential intervention. So if you're in any long trades up here, just be careful, especially when we poke that 160 round number up here. Could be some potential fireworks like there has been historically. So anyway, enough of that. Back to the top setups, guys. Swiss pairs are still on the docket to short. So that means buying the euro, the New Zealand dollar, and the Aussie dollar. That's pretty much your trade plan right there. Taking a look over here at the economic heat maps. Why is Swiss getting the call into short? Well, it's because it's, I think, the second weakest currency right now of the majors. I mean, you've only had one bullish number come out, and that was over exactly 1 month ago. Okay, that was their PPI number. They had a neutral reading on their inflation gauge, but other than that, it's been all red, including unemployment numbers that they did have a week ago tomorrow, rather. So last Friday, for the unemployment rate. So unemployment rate, and that's still really not that bad. I mean, they go from 2.9 to 3.1%. So yeah, it's an increase, not great, but it's not like it's Canada's number up in the 5% range, right? Or a couple of these others. So yeah, that's exactly why we're getting told to be short in the Swissy. Okay, and then there's even another one further down, a score of a 5. So pound Swiss, Aussie, New Zealand, Euro Swiss. I mean, that's really your trade plan right there. Nothing changed as far as the metals market. Silver and gold is still up there. I'm a little annoyed because I did miss out on a silver trade. Let's go take a look at that. Get my drawings back on over here. Okay, I was looking at this demand zone right here. And for a potential buy, that's a 4-hour chart. Let's go down to a 1 hour. Okay, so I was pretty much looking at my confluence possibilities, and obviously this would be the lowest 1 hour gap that I have from here to here. That's a very narrow range candle, though. I got to admit, I wasn't the biggest fan of that. And not only that, but I was not a fan at all of the fact that there was very little trading activity for that 3 hours. So that candle, that candle, that candle. And it makes sense because, hell, that's the early part of the Asian trading session. So oftentimes things go there to die, at least for the first part of the Asian session before, some items do pick up, like metals, Bitcoin. And lost my interest in it because, as always, whenever I see a supply or a demand zone, I got to see big trading activity just like this. And there goes my chart again. Let me get my chart back up again. I don't know why this is falling off. Stay on, chart. Stay on. There we go. But anyway, yeah, when I saw that, that's just where I kind of lost interest. Now, guess what? It didn't matter because when it came down, it still got a push away from the zone. Okay. So even though it didn't pass my set of rules, it clearly passed other people's sets of rules because that's where people started buying it up. And it's already moved over a 1-to-1 reward to risk, right? Now we're coming into that supply zone overhead, that red box that you see there. So really in its wake, I did draw up this brand new 1 hour demand over here. So this is potentially another area I'm looking at, but I honestly would prefer to get into a trade here if we break this supply zone. If we break this supply zone like this, then that would tell me that that demand zone would be a little bit stronger than what I initially thought. So that's the potential play I'm looking at. Will I trade it if it does not hit this supply and comes back and touches? Maybe. It just depends on if I get a pretty strong rejection. If I get a pretty strong break of structure to the upside on a smaller time frame, maybe a 5-minute. Okay. 5-minute or a 10-minute, or maybe even a 3-minute, guys. I'll step down to some of those smaller time frames and pretend I'm a scalp trader for just like 5 minutes until I get my entry, and then obviously manage the trade from the higher time frame. So that's a potential play. And not only that, if this thing just drops like this now and comes in, yeah, it would definitely be a smaller risk trade. I would not feel comfortable putting on a full risk. Okay, what I use as a full risk, or what I personally consider, what my trading rules calls a full risk. See, I only do 0.2 to 0.5% risk per trade. That's it. I've been in my past lives, I've done the whole, 2%, 5%. It was really bad when I was a penny stock trader because I wasn't even paying attention to my risk. I was just looking at flat dollar amounts, and indirectly I was, risking way the hell too high. So needless to say, I blew that account, and I'm glad I did because it taught me a lot. I often say, and I've heard many people echo the same thing, if you really want to get good at trading, go blow an account as fast as you can, because that'll be the best teacher. That'll teach more than anything I can teach. Okay. Or Trader Nick or anybody else that we follow on YouTube. Blow an account and you'll learn really quick what not to do. Okay. All right. Getting my caffeine rolling a little bit this morning. Mr. Peeps, are you looking at anything particular? Trading anything particular at the moment? Yeah, I'm pretty well flat at the moment. Like I said, this was the one that I missed. And I don't really do a whole lot of Asia session trades anyway. But yeah, guys, I didn't break my rules. I stayed flat because, again, I just did not like the excitement on these 3 candles right here. Right. So anyway, c'est la vie. Trades run off and left me. If it breaks structure up here, okay, this top structure and returns, we may have a new trade on our hands. What about gold? What do we got on gold? Gold, I'm still ultimately waiting for this daily 4-hour demand zone confluence down here. I've got gaps on all these time frames, so that's ultimately my favorite play. Now, if I'm playing around in some smaller time frames up here, okay, number one, we're at the top of the curve, right? Okay. Depending on where you put this swing low. I mean, is this not high on the curve or the top third? Okay. So that's ultimately something I'll keep in the back of my mind on a higher time frame. But it is nice to know we do have this former resistance over here that could potentially become support just ahead of this smaller time frame demand zone I'm looking at over here on a 30-minute, I believe it is. Yeah. So I do have a 30-minute demand zone candle here. Now, this candle formed at the beginning of the Asian session. Okay. Well, basically the Sunday open here in the States. Gold for ages. Hey, anybody that's been in gold and silver for ages, man, they're doing pretty well, right? Keep adding to it on pullbacks. There you go. Got you a nice position trade going. You got you a nice, really nice open unrealized profit. Hell yeah. Man, that's the way to do it. That is the way to do it. So anyway, this is the zone I'm watching. Now, the only real reason I'm interested in this demand zone back here on a 30-minute time frame is because we actually had some volume. We had some trading activity, some pretty decently robust trading activity that formed right after the creation of that demand zone. Okay. Talking about these yellow candles over here. So that's why I'm excited about this. And not only that, but what are all these swing lows down here? What are all these bottoms? Is there not potential sell orders in there? Is this not sell orders in here? Why are there sell orders there? Well, from all these people that bought in here. Okay, they got to put their stop losses somewhere. And I would suspect that they're potentially putting their stop losses right down here, kind of in the middle of that former resistance, but most importantly, ahead of the unfilled orders of the demand zone. So I do like that, even though it is high on the curve on a higher time frame. Stepping down to a smaller time frame, these pictures change quite a bit. So there's another alert. So let me see. Euro dollar has hit my zone. Okay, so check this out. Let me see what we got. Short-term dollar yen. I tried looking at multiple instruments, but with my work, I can't keep up. So only do that pair now, so I can get it used to how it trades. Yeah, dollar yen. I call it the Porsche or the BMW of the currency pairs because as far as the dollar pairs goes, it is the fastest. It moves 120 pips a day, I think it is. So yeah, probably not a beginner asset. But Mr. Peeps, I know you're not a beginner. I know you've been in Nick's chats for quite a while, so I'm sure you can handle that no problem. Clearly, if you got this long position on gold. So yeah, dollar yen, I like it. Moves pretty quick. Euro dollar, so it is not on the bullish list at the moment. It is a +4, I do believe. Euro dollar neutral 4. Okay. So I really just need one more piece of dollar weakness or euro strength. So what I was thinking on this euro dollar position was the fact that today, here in about 40 minutes, we do have the weekly unemployment claims number coming out for the dollar. And if this is true, which we all know how the economists are, sometimes a lot of times they're wrong, clearly. Okay, they're just like the weatherman, like I often say. wrong a bunch, but still get their paychecks, right? So they are projecting 7,000 more unemployment claims. So if that does happen to ring true, then that could be a potential negative for the U.S. dollar. So if that is a negative for the U.S. dollar, popping over here to the U.S. economic heat map, looking at the jobless claims number down here. The previous time we got the number, it was actually bullish for the dollar. Okay, they forecasted 210, but the number was only 208, so it's 2,000 less. So ever so slightly bullish for the dollar. Now today's number is projected to be worse, so that would change this box from bullish to bearish. Okay, that would be another point of dollar weakness. Okay, so if that's the case, then I would assume that euro dollar over here would go from a +4 to a +5 or a +6, right? So that's why I just want to. That's why I was watching this demand zone on euro dollar, because if we look at this, we got a pretty decent, I think, demand zone. The volume could have been a little better, or the trading activity, but this red candle here, we had a big expanded range candle move up. It went through a couple former support resistance lines that are these blue dashes over here. So to me, that shows some pretty decent strength from this price point. And just longer term, we're still kind of chewing through this daily demand zone. Okay, if I go all the way out to a daily, okay, this is what I'm looking at. Zoom in here. This daily candle here, because on this daily demand zone, we had a gap as well with some pretty decent strength. Okay. And on the daily, this demand zone obviously broke structure here. It broke structure here. It broke structure over here. Okay. So it broke three different sets of structure points. So on a daily, I feel like this is a pretty good area. Now, I just moved it to the left to get it out of the way, but there you go, right? It's in that daily demand. So this is really nothing more than a little bit of a second chance entry, just obviously looking at it down here on the 1 hour demand or 1 hour time frame. So now what we've got, and this is actually a little more complex than I realized now that I'm looking at this again. Now we go to a smaller time frame and find a break of structure, right? So first of all, on the, let's see here, what time frame did I do that? 15. So I was basically kind of looking at this area here as a structure point that I wanted this area to break, and we got that. And we did actually get a close up here just above it. So I was looking at this point here, okay? Just kind of an aggressive entry. Hello, Zilvinashankaskis 2238. I probably didn't say your name perfect, but I always try my best. So hello and welcome. Greetings from UK. Awesome. Can you look at NASDAQ and US 30? Absolutely. We can do that. I'm just going to finish up here on euro dollar real quick because I may be getting into a trade on this. I may have to take 2 seconds and pop over here. But anyway, here's the ultimate piece of this. So we broke structure, and I go all the way down, guys, to a 3-minute time frame. And we have a demand zone on a 3-minute. See that 3-minute zone right there with a gap, okay, with some eventual breaks of structures. Okay. This is where I'm thinking I may just pop. In fact, I'm going to do that. So I'm going to pop over here real quick. Give me 2 seconds, guys. I'm going to pop over here. I got 9,000. I got so many monitors, but over here, I'm just going to pop into this trade real quick. Euro dollar. Now, I'm basically jumping this trade, guys, because obviously that reporting does, you know what? Let me think about this, guys. Let me think about this. I should probably wait for that news to come out, huh? Because that news, let me think about this for a second. What do you think? Should I jump the buck on this news event coming out in 35 minutes? What do you guys think? With Lithuanian names are hard, boy. Very good, very good. Nice. Hey, I try though. For whatever reason in school, math was not my subject, but grammar and spelling and language arts, for whatever reason, I always had straight A's in it. So I always at least try my best to make sure I say somebody's name correct. Because, hey, our name is one of the most important things we have, right? So yeah, I always try to respect that. But anyway, I'm trying to make a decision here, guys, on this euro dollar. I should probably wait. Okay, this is where years of experience tells me to wait. Okay, I should probably wait. Make sure we get a weak number after all. Okay, if we get this weak number in the dollar, then I'll definitely be probably hopping into the euro dollar because I think by then it'll change. Okay, this should go up to a 5. Let's go double check. Let's actually, now that I think about it, we should probably double check over here and see what the jobless claims number gave last time. So let's go find euro dollar over here. Now that I got my neutrals turned on, euro dollar, there we go. So here it is down here. Let's go find jobless claims, unemployment claims, euro dollar. Yeah, see? So the last time, again, between the euro and the US dollar, that was a bearish number. So yeah, if we get, like I said, if we do get that negative dollar, that negative unemployment number, then this box should turn from -1 to +1, which would give us actually it'd give us a 4, wouldn't it? I think it'd give us a 6. So 5 or 6. So I'll wait. I'll sit on my hands. And we'll see what the results are here coming up in 34 minutes. All right. I talked myself out of it. See, in the old days, I'd have jumped in that trade in a heartbeat. But now that I know about the reporting coming, I'm going to wait. So, yeah, let's check into some, like you said, NASDAQ, some Dow. Let's go take a look. Number one on the top setups page, it's nowhere to be seen. It's down a little lower. So Dow's down there at a +4 as well. Okay. Now, again, if that unemployment number comes out, let's see, what did we have the last time? Unemployment. Yeah. So we'll definitely probably stay away from this one because if that does come out bearish, that 730 central unemployment number, okay, if that does come out bearish, then this will drop even further. So Dow would likely go from a 4 down to a 3 or a 2, right? Same thing with NASDAQ. And then S&P, I do believe. Let's go find it. I think it's lower. It's been pretty low. Yeah. So S&P is as straight up neutral as it gets. So that's from a fundamental sentiment point of view. But if we're looking at technicals, let's go look at the technical side. Technical side of these. So yeah, NASDAQ. Yeah, let's do NASDAQ first. That was first on your list. Okay, so as always, starting from a higher time frame, what have we got? Well, we got some higher lows forming. We kind of have a double top on this. So it looks to me like NASDAQ is kind of getting crunched, right? Double top, it's just not wanting to go any further north, but the lows keep getting more coiled up. So are we forming quite a bit of pressure in this area? Looks like it to me. Okay, if we just get rid of the drawings for a second. Yeah, because we're getting this, kind of, where you at? Getting this price action here, just higher highs or higher lows, I should say. But then again, we're getting that. It's just not wanting to go anywhere. Now, we do have an overhead supply zone. Okay, so this is part of the reason, this supply. So it looks to me like we've actually touched into it. Now, ahead of that, and this red box, that's going to be a 4-hour supply. So we've got a pretty decent looking supply zone confluence if we're looking at the higher time frames. Okay, we're looking at this green candle with this big impulse push away, leaving a gap in its wake. And then you guys see how far down it went. Okay, it went all the way down to this previous former resistance point. So there you go. These former resistance points are quite strong. Now, I don't use them as a buy decision or a short sell decision. I just use it as kind of a filter. Hey, by the way, where are retail traders looking to buy this thing? Okay, it creates a liquidity point. Will you be on Nick's live stream? Yeah, I was the other day. I told him I'd come on as, anytime. Yeah, if he ever needs a backfill, if somebody can't make it or whatever the case is, yeah, I'd be more than happy to hop on. I love it. It's always fun to me. Go on and try to share and help people, even with one little nugget. Sometimes one little trading nugget is all we need to really understand something. And Nick does an incredible job of explaining everything, and that's what drew me to him to begin with. That and the Edge Finder. but sometimes somebody may come in and say the same thing, just a slight bit different. And maybe that slight bit different is what turns the light bulb on for people. So I know he's turned the light bulb on for me on quite a few things. I've got a few other people that I like to follow that have turned on some major light bulbs. And so, yeah, anytime. I'm totally down to pop on. I am unemployed, so he can give me a job if he wants. Yeah, I was doing some streaming, coaching, moderating for Ola Prime. Okay, Ola Prime prop firm. You guys have probably seen Nick advertise it on his videos that he posts every day. But yeah, we had a pretty good thing going. We were doing daily live streams, and they just basically didn't renew our contracts just because they had to put a temporary pause, I guess you could say, on the streaming, just because we weren't getting enough viewers. I mean, it's really just as simple as that. And they were just, when you have to cut your losses and move on at some point if it's not paying off. So we had a great thing going. We just could not sustain the viewership that they were looking for, and because of that, they just with all of us coaches, they just didn't renew our contracts. So yeah, this happened just a week ago. Okay, so it's an interesting time in the world of Tiger. Okay, so looking at some prop firms. I'm trying to figure out which instant funding prop firm that I want to get on because, well, hey, when you're jobless, man, you got to look to do something, right? So I've got an updated LinkedIn. I'm talking to some people on there, see if there's any other companies out there that might be looking for a coach, a Forex coach, or a streamer, or something like that. So we'll see, but I'll figure it out, guys. Hey, at the end of the day, I just got to step out on faith. I've been here before. Okay? Step out on faith. The big man upstairs watches over us, right? Watches over me. So I'll be all right. I'm not going to fret it. But anyway, back to the charts for NASDAQ. That's the daily view. So if we go down to a 4-hour, not really seeing any major demand zones there. You have a new one forming here. Okay. Problem is there's not that much volume. It's just being created in the Asian session. And oftentimes I don't like to hop into a zone on an Asia session unless I get some some trading activity from the institutions. But if the institutions here in the US are off drinking beers by that time, right? For the Asian session, they're off entertaining their guests that have flown in with big wads of cash. So they're not actually sitting there at their trading desk hitting the buy and sell button, right? So I prefer that the supply and demand zones that I trade were created in the New York session, but specifically in the London, New York overlap, okay, which is my yellow bars. So yeah, that's basically a sessions indicator, guys. The red is Asia, which is always light on the volume spread analysis movement. Okay, you usually see a lot of blue bars down there. It just means it's low trading activity. It's a lot of retail trading, right? And then obviously some of the Asian trading firms, but you guys know they're just not near as big as New York, London, right? So that's Asia. The orange is the end of, or I'm sorry, it's the beginning of the New York kind of pre-market. Okay. And then I'm sorry, guys, I'm saying this wrong. That's the London session open. And then over here is the London, New York overlap. Okay. Where New York opens. And then obviously the green is New York by itself. So London is closed by here. Okay. And then the rest is just New York. So my favorite is supply and demand zones get formed in the New York, London overlap. So no more a la Prime streams. That is a shame. I enjoyed you and Richard streams during. Oh yeah. 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 It was out of our hands. Yeah. They just, I don't know. There were just a handful of things that didn't quite get set up correctly, I don't think. They tried though. They tried their best, and it was an amicable separation for everybody. I mean, we're all still cool with them. They did tell us that if they try to give it another go, then they'll definitely be giving us a holler. So yeah, just the money ran out, man, on the investment that they put on this initial, attempt, you could say. So, But yeah, I know they're talking with I know that they are or have been talking to some social media experts, people to kind of help out on that. But yeah, that's it's a pause. They told us all that they would see about trying to get it set up again in the, mid late summer, just to try to give it another go. So I don't know if it'll work, if it'll actually come into fruition or not, but that's what they told us. But yeah, no, we're all still cool with them. They're good company, and it's still my favorite prop firm, despite the fact that I'm not with them anymore. Okay, as far as the challenge accounts, okay, the prime and the pro challenge accounts they have now, the instant funding, which is what I'm personally trying to find. I just have a slight issue with the 15% consistency rule. But that's just because of my trading style. I don't do a whole lot of trades. I tend to find 1 to 2 grade A setups a week. So anything more than that is just icing on the cake. But when it comes to like the 7-day monthly cycle, the monthly payment cycle, they do have a 7-day profitability day requirement. So just basically means you need to hit 0.5% gain or more for it to count as a profitable day. You have to have 7 of those to get a payout. And that's right at the threshold of what I get a week, a month, right around 6 to 8 trades, right? So there'll be some months where I wouldn't be able to qualify for a payout just because I didn't get enough minimum payouts, if that makes sense. So that's just one little thing I'm trying to figure out and see if I want to square that circle and hop in and get one of their funded accounts, right? Or do I need to look elsewhere where they don't have that rule? Well, I've looked at like several other prop firms, and this is actually what I put on my shorts on my Instagram and Facebook yesterday. Was talking about this because there's all kind. You guys know. I mean, when it comes to prop firms, there's so many dang trading rules. It's hard to keep them all straight. Then you got to, compare them with your trading style to see if it would fit. There's equity stability scores. There's obviously the consistency rules. There's trailing stops. Is it a static stop, meaning it never moves on you, the trailing loss, overall loss? Or does it cap at the starting balance? Or as you grow your account, does your equity chase you no matter how high you grow the account? Okay, 6%, 8%, 4%. There's so many rules on there. And it seems like with every single prop firm I've looked at, I like about 80, 90% of it, but there's always one little thing that just goes against my trading style. So whether it is a very low consistency score like 15%, whether it is an ESS, equity stability score of 20%, 30%, where they take your highest win plus your highest loss, divide it by your total profits, multiply it by 100%. Hey, it comes out with a percentage. So it's got to be under 20% basically on some of these some of these firms. But I'm not, but because I only trade higher time frames, daily 4-hour time frames, I'm just barely under the threshold on some of those things. So in other words, no matter what I make, I probably wouldn't be qualified to take the payouts. It's funny because it really a lot of these rules penalize you for actually doing trading the way it should be. Meaning only wait on the good grade A setups, right? That's what we teach you guys all the time. Wait on the grade A setups. If it's anything else that's not following your rules, you ignore it. Well, that's what I do. And that's the way that traders that have cash accounts, big amounts, that's what they do. That's what a lot of them do. Okay. Wait for that one good setup a week. But unfortunately, the prop trading world, they advertise that they want you to trade a lot, right? A lot of them actually get paid on commissions or get paid per trade that you do. Okay. So they want high frequency trading, even though they say they don't want high frequency trading. So it's just an oxymoron, and I can't quite wrap my brain around it. And it's just overwhelming. I'm like, damn it, I need to figure out some income, right? I mean, I've got a pretty good stash that might last me 3 months, 4 months. Okay. Talking about all my bills and everything, but I don't want to necessarily burn through it. So that's been literally what I've been doing all week, is studying up on all this and trying to figure out, okay, which one do I want to jump on? Which one do I want to take a chance on? Because I know my skills. I know I'm fine with it on most of it. Okay. So Do I want to have a low consistency score? Do I want to have to maintain a low ESS score? Do I want my equity, my drawdown? Do I want it chasing me into infinity? Okay. There's all these things that I'm playing with. It's different. It's easy. It's an easy answer on the challenge accounts, but I'm looking at the funded accounts, and their rules are just so much stricter. So anyway, that's where I'm at. What would you say, Mr. Peeps? I'm the same with prop firms. I only have one account, one I won with Ola, so have been able to dip my toe in the water. I have looked into more since then, but can't seem to find a fit. Yeah, there's just so many. Okay, a lot. And then even looking at something like Trustpilot to look at the reviews from the customers, even that can be deceiving because I've been on there and I've noticed that a lot of the complaints are from people that lost their challenge because they didn't pass a rule. So it's automatically the company's fault because they didn't follow the rules, right? So even that can be deceiving because there's going to be a lot of negative reviews on there, but there are a lot of good reviews too. So it's a good source to look at, but it's just kind of funny. There's a lot to it. There's a lot to it, but we'll figure it out, right? All right. Nazi. So yeah, I'm keeping an eye on this 1 hour demand zone down here. A lot of trading activity, okay, in that creation of that. I really like that. I like that it broke this structure over here. I wish, though, it had a bigger gap because we got a very negligible gap right here, did we not? This is about as small of a gap as it gets. So this is a bit of a turnoff right here. I got to be honest. I mean, if we draw the gap up, it's literally from here to here. Is that not the cutest little thing you ever did see? Yeah. Mr. Peeps, me and Richard and Michael, we're actually looking at playing around with some side projects. So yeah, we're still in touch. I just saw your previous message on there. But yeah, they're doing well. Yeah, we're actually going to I'm going to actually get on a call with them later this evening or later this morning. Michael and Richard. So, but hey, that's the beautiful thing about All Up Prime is that we all met each other. A lot of good things happened. It helped me a ton. Guys, my trading got better just from working at All Up Prime because it's for the first time in my life, I was actually able to focus on trading all day. I've always had jobs, right? Sales job. I mean, I come from the sales field. I was doing some sales jobs and some medical transport jobs, a couple other things. Okay. But yeah, working with All Up Prime was a blessing. And they're all great people. I like them all. So anyway, yeah, we still keep in touch and we're looking to play around with some side projects. So hopefully we got some exciting stuff to share in that avenue at some point coming up. We do have about 18 minutes before the unemployment claims number does come out. But yeah, just looking at this zone over here again, it's a little bit of a turnoff because the 1 hour time frame did not give me an acceleration gap at all. Okay. And really none of these time frames, 4 hours, same thing. I think 2 hours, probably the same. Yeah. These all basically, when you look at these wicks and candle bodies, the reason I dislike it is because they all overlap. They overlap candles to the left and right, do they not? Okay. You don't see any gaps. Got to have a gap. Gaps to me show that demand very strongly exceeded supply. Okay. Now it did exceed supply because obviously the price is going up. But when you have the gaps, like over here, we had this down gap. Okay. That's a very, very, very strong example of supply exceeding demand at that point. Right. So I've got to see that in my zones, just ahead of the proximal line of my zones. So just to remember, the proximal line would be this line closest to price. Okay. The start of the demand zone. And then the distal line, distal meaning distant. Okay. That's going to be the farthest. That's going to be the bottom of the demand zone. Yeah, that's just a little lingo, a little terminology. I don't know how prevalent that is. That is specific to what I was taught anyway at Online Trading Academy. It was good when you all checked each other's strategies to get confirmations on trades before entering. Yes, Mr. Peeps, and that's exactly why we're probably going to be. That's why we're playing around with a side project. because I love supply and demand. Richard loves the pitchforks for the higher time frame, reversal, potential reversal patterns. He uses on the smaller time frames too, but I see that as a big plus. Now, I know the basics of pitchforks, but I don't know it near as in depth as he does. And he's been doing it for X amount of years. And then I don't also on the other side of that, I don't use a whole lot of indicators, right? I just use naked charts. I use volume spread analysis, but to show me where the high institutional volume is picking up. But other than that, I really just look at naked charts. So Michael has a really good, I mean, you remember Michael's got a really good system on indicators and things of that nature. So yeah, you put it all together, might be a pretty cool thing. But I think we're looking at some type of a mentoring education type of thing. So yeah, again, more details to come on that. Coach Daryl, that was doing the futures. He's doing a side project as well that I might be playing around with as well. So I might potentially have quite a few different things coming up. I just need some of it to get going ASAP so I can start getting some money. Because I've never had a big cash account. I've just never had the money for it. So for me, if you build it, they will come. For me, I just spent my whole time just studying this stuff, knowing that I'll eventually get a shot at it. And this is why and I've got 2 challenge accounts and they're doing really well. But I'm ready now personally to go the next step and actually prove it. So that's why I'm shopping these instant funding accounts. But no, a lot of good stuff coming. Due to tariffs, court has been postponed, thinking stock's going to go up. Tariffs court has been post. Oh yeah, stocks. Yeah, I haven't honestly followed too much on the tariffs. I just look at price action. There's so much crap in the media. There is so much junk over here that it's become paralysis analysis. So yeah, I want to know the top line things, but when it comes to all the in-depthness of it, I really don't dig too deep into it. And mainly because I don't do anything long term. Okay, I'm in my trades 1 to 4 days max. Right. So yeah, you probably know more about that than I do. Zilvina. But anyway, just to finish up for you there on NASDAQ. Yeah, a little high on the curve up here. So I'm basically just waiting for this demand zone down here, guys. That's really it. I mean, again, yeah, I didn't like the fact that it didn't have a gap, but I do like the fact that it pushed and broke these structures. It had some decent trading activity, and it is that former support resistance line that started way back here. And look how many times we got rejections on this line right here. 1, 2, 3, okay, 4, 5, 6 right here, 7, okay, 8. Okay, now that's not the magic sauce. That's just nothing more than one potential odds enhancer. So I have my alert at 25,211 for a buy at the demand zone just below that. So hopefully that helps. But again, I don't have a strong fundamental or sentiment reason to buy NASDAQ, but potentially here in about 12 minutes, again, we do have that unemployment number coming out. Potentially that could help. So real quickly, I'll go through the Dow since you asked about that one as well. Same thing. Daily demand down here with a couple smaller time frame confluences. Now up here, oh my gosh, did that miss my damn entry? Look at this. Look at this. So you guys see clear as day, I got a 4-hour zone here, right? This 4-hour demand, okay, which also acted as a former resistance back here. I just didn't draw the line up. Okay, there's your former resistance. Get that drawn up. And it's going right through the heart of our demand, right? So we've touched it. It's already touched. Oh my God almighty. Look at this. Look at this nonsense. So guys, I wasn't looking to buy the proximal line of the 4-hour part. I was actually stepping down to some smaller time frames. Let's look at this. So this is now a 1 hour. Oh my gosh. Okay. So there's the 1 hour candle, but I specifically, you see these other lines down here. Okay. That's going to be probably, I don't remember, 30-minute, 15-minute. Let's go look. But we just missed it. So it basically caught a bid at the top part of the zone. Yeah, here you go. See, I was looking at this. I was looking at the entry more specifically on the 30-minute candle, which is these white lines, right? But what happened? It just missed it. Ah, look at that. We missed it by what? 20 bucks? 20 points? Look at this nonsense. Did we wick? Did we touch it? No, we didn't. And that's why my alarm didn't go off. My alert didn't go off. Look at this crap. Look at this. I missed it by that much. Oh, missed it by 9 points on a $48,000 item. Missed it by $9. And what happened? It caught the bid a little higher up and it's taken off. What the hell? What the hell? It couldn't have dropped 9 more points. Oh, have mercy. What's the range? 111 points. Assuming you put in a stop loss down in this area, it's 120. And it's already moved 12, 24, 36. It's already moved 3.5 to 1. See, I didn't want to buy the proximal line of the 4 hour because I wanted the confluence. I was looking at the confluence. So there you go, guys. Sometimes you just missed your entry just a little bit. And then this happens, and then you get to complain about it the next day. So, hey, you know what? C'est la vie. I did not break my rules. That's the important thing. Let's see here. Hate it when that happens. Yeah, Mr. Peeps. I didn't break my rules. You know, as annoying as this is to miss my entry by 9 freaking points, I didn't break my rules because my rules state that I have to get a confluence. This is my rule. I made it. Nobody made this for me. This is just my rule. I like to see multiple sets of eyes on the same price area. So within this 4 hour demand zone, okay, that's clearly your 4 hour time frame traders. There's traders that only want to trade 4 hours. Who else likes to trade 4 hours or higher? The big banks. Okay, the banks aren't playing around on 5-minute time frames, 15-minute time frames. Right? They're trading the higher time frames. So that's why I always start at daily 4 hour. Now, I don't think I got the daily confluence on this, did I? Yeah. See, I didn't get the confluence, but what made up for the fact I didn't have a daily was the fact that I had a former resistance point over here. So that made me, that was kind of, that basically took the place, right? That's just kind of one of my specific rules. If I don't have a confluence, okay, a higher time frame confluence, then is there something else that can maybe make up for it? Well, this is a big help right here. Okay, former resistance turning to support. So anyway, my rule states, okay, 4 hour. Okay, there's my 4 hour. Now I need to go down to a 1 hour. Okay. The 1 hour was up here, but I still felt like we were going to be getting a test of the former resistance, which just so happened to have the 30 and the 15-minute time frame traders looking at it. Okay. And that's why I ultimately selected my buys down here on this candle. Okay, that's the 15-minute time frame traders looking at this trade, looking at this point. So I'm right there with the 15-minuters. Okay, we missed out. But if you're a 4 hour trader, if you're a 1 hour trader, then you got your entry. Okay. I'm not the only supply and demand zone trader in the world. There's a lot of them out there. I just like to look at a little bit more of a confluence than I think a lot of people. Okay. So that's why I missed that entry. But c'est la vie. It's gone. Have a great trading rest of the week. Yeah. Thanks for stopping in again, Zilvinus. Thanks a lot. I'm here every morning at 6:30 a.m. Central Standard Time. So however that would translate to Lithuania, probably 8 hours. You're probably about 8 hours ahead of me, I think. 7, 8, 9, 10, 11, 12, 1, 2. So you're what, probably around 2 p.m. your time? 2 or 3 p.m. your time is my guess. Oh, you're in UK, so you're 8 hours, right? I think 8 hours or 7 hours. Yeah, nevertheless, yeah, I'm here at 6:30 a.m. Central Standard Time, Monday through Friday. I usually go for an hour and a half, so I go till 8 o'clock a.m. my time, 6:30 a.m. to 8 a.m. Central Standard Time, my friend. So yeah, come on back. I'll be here. We'll be here. We'll be here for sure. So anyway, is there another play on Dow 30 right now? Not really. We do have 5 minutes until that release comes out. Absolutely. Good stuff. Good stuff. Is that not an interesting looking pattern, by the way? Is this like a upside down head and shoulders with a guy that has no shoulders? Look at this. What is this crap? With a big old melon down here and almost no shoulder. Is that what we're forming? Little tiny neck. He doesn't have a neck. Okay. Is that what we've got going on? I don't know. We'll find out. If that's the case, then do we have a potential trade in this area? Probably not, because there's no trading activity. Let's go to a 2-hour real quick. Yeah, I wouldn't look. Yeah. You guys see, we just have, again, Asia session, Dow. There's just not a lot of trading activity. Down here is yesterday's London, New York overlap where the volume is. So if anything, and when we had that initial push up right here, it did not break this structure. It took a while before it finally did. So yeah, I don't know if I'm very interested in this area, but let's just drop down. Let's see if we can find a smaller time frame zone in here. A lot of wicks. Yeah, the picture isn't very pretty. I got to be honest. 10-minute, no gaps. Okay, I don't have any gaps in here. This gave me a gap for a minute, but what happened? Price closed the gap, touched the zone, and lifted off. So that's old news. Last resort is 5 minutes. Yeah, I mean, you by definition, you guys, we could draw this up as a zone right here, but I don't think I'm going to like it at all. I'm going to go ahead and draw it up just so I can see it visually. Not a whole lot of trading activity. That's obviously number one. Okay, it was pretty light down here. This is where I like my zones created, when we get candles like this. Okay. Half a bat. Yes. Yeah, the old half a bat structures. Yeah, I always thought that was the funniest name. But it's so true though. What time frame were you seeing that half a bat? Something like this. Let's see. Oops, I did that wrong. Trying to remember how he did it. Oh wait, something like that. Something like that. It's my guess. I don't know. I can't remember exactly how he did it, but yeah, I mean so it's funny because I kind of look at half bats too. It's just a little bit different than the way he does it, but it's basically the same thing I look for on my confirmation entries. So on my confirmation entry, obviously I get one ear. Okay. Call that one ear. And then that double bottom or whatever. But on this one, remember, for me, I just have to break a structure as far as confirmation and then get one more pullback for my confirmation. So that's really, I think, the only difference between Michael and I. So this is his half. Well, actually, I guess it would look a little different than that. Yeah, I can't quite remember, but it's similar is what I'm saying. It's in either case, we're doing the same thing, just a little bit different. And I'm using it We're both using it for confirmation entries. So yeah, it's really kind of a similar thing. Mine just has an extra ear or two. All right. Well, let's go look at the news. Unemployment comes out in 20 seconds. 20 whole seconds. 20 seconds. Again, I'm watching, what the hell was I looking at? Euro dollar. Okay, euro dollar is the one I'm interested in. So let's go over here to euro dollar, and I'll tell you the news here in just a moment. Okay, there goes. So I'm glad I stayed out of that trade, right? So we've gotten a decline. And when it comes to the news, let's go flip this down here. I'm just getting rid of my yellow and orange folder events. Yeah, unemployment claims, so still pending. But the GDP, oh yeah, early this morning, by the way, we did have the GDP come out for the pound. They had 0.2% increase, so that was good for their economy. We're just still in pending mode on unemployment claims. So remember, the previous was 208,000. The forecast for right now is 7,000 higher. And if they'll ever get done pending, we'll see what we get. I don't even know what we're going to get. We're going to get anything here? Why is the number not, why is it stuck in pending? Is it pending over here too? Or was it just that? Yeah, we're still pending. Woo! Okay, Euro CAD level of interest. What was I looking at over here at Euro CAD? Okay, so there's double bottom. Let's go look at my setups. Euro CAD, where was that at over here? God dang it, why is that not moving? I thought Euro CAD was on my bullish list, is it not? I guess it fell off. Oh, it's only a +3. Okay, so we'll ignore that. Wow, look at that. It's still stuck. Oh, there we go, pending. Okay. Awesome. Ooh, that's good. So we had a 17,000 less unemployment jobs number than the forecast, even lower than the previous week. So that's a good dollar figure, guys. That's a very good dollar figure. So going back to the euro dollar over here. Yeah, definitely. I definitely want to stay out of this buy now. Okay. Because that's not going to help. That's not going to help a euro dollar. That's going to make it go lower. So it's even further in neutral now. Just going back to my list over here. Yeah, let's go take a look at gold and silver. Okay. Ideally, this would be negative for gold and silver, right? Good for the dollar. Oftentimes, these reports are negative for the metals. So, yeah, there you go. Gold, you're getting that down move. Not anything too crazy at the moment. Yeah, I mean, there's some slight weakness on the gold and silver at the moment. That's to be expected because it's good for the dollar. Let's go look at the Dixie. Okay, here's your Dixie. So, so look at this. So this is a new development. That orange line was that daily supply zone I drew up last week. Dollar yen is on the move up. Yeah, it should be. Yeah, we'll get to that in just a second. But look, so this was a big deal. This was what I was actually talking about on Coach Trader Nick's page the other day. Hey, I'm looking to see what kind of reaction we get from the supply zone. So now we have dollar strength pushing through the supply zone. So that's a good thing. Now, another thing is, as far as the next, I need to turn my magnet field back on over here. But the next potential reversal point is now way up here. Okay. So now that we're through that one, now we're just wicking through. We haven't closed yet. It very well could, obviously, come back into the range and close. It very well could. But at the moment, we've peeked through. So if we close up here, then our next potential reversal is going to be clear up here. So that would give us probably a good week or so of bullish buys. Okay. Bullish buys. Let's go to the dollar index real quick, the dollar heat map. Where am I at? There we go. Okay, so just remember, employment, jobless claims. Oh, that's actually going to stay the same because the previous week was bullish also. So there you go. So that's going to remain the same. Okay, 45%. Now that I see that. Yeah, that's not going to change like I thought it was. It's going to stay the same. But it definitely didn't get any weaker. Got better. I mean, much better, because the jobless claims number. So the previous time it was bullish, where they had 2,000 less, but this one actually fell under 100,000. So that's nice. That's pretty nice. That's really nice. I mean, they were expecting that thing to go up, but instead it went the opposite way. And it dropped below a round number, right? We all like round numbers. Dollar yen. Let's go take a look at that dollar yen, Mr. Peeps. See where we're at. I was watching it yesterday because it was, let's see, daily 4 hour. Yeah. See, look, I mean, there's another example. This is a 2 hour time frame, but I was looking at this area here of demand thinking, man, I really would like to buy that. The problem is it wasn't giving me a bullish signal. Yeah. This is that silver play that I was talking about at the outset of the show. So we have come back to this 1 hour demand. The problem is, though, guys, we didn't even have enough strength to break a structure, nor did we obviously, break through this supply zone. So, yes, it is a point. Yes, silver is still, I believe, given a nice bullish signal. In fact, let me just do this. I just need to refresh this screen so I can get my bullish and bearish items only. Yeah, there you go. So there you go, guys. So actually gold, silver fell off the list. I'm just going to hit the refresh there as well. Come on. Refresh. So yeah, gold, silver's off the list. Okay. So they've fallen back to neutral. So I'm going to ixnay and ignore the gold to silver ideas. Let's go back to the dollar yen. Sorry, Mr. Peeps. I'm looking at everything else over here. 1 hour or 1 minute. Yeah. So yeah, I mean, that's no surprise. The dollar yen should go up on a really strong jobless claims number like we had. But I was looking at this 2 hour demand zone right here, thinking I really would like to buy it. But again, the problem was it wasn't giving me a bullish signal. And now it's definitely got room to go up here to this supply zone area up here. I mean, if I'm looking at a 4 hour, there would be your 4 hour zone. Okay. For a take profit just below. If somebody was in a trade on this thing, I would definitely be looking to take profits before that, or at least lock in some unrealized gains on your stop losses, because that 2 hour zone worked after all. What is the edge finder scoring over here on euro dollar? I'm sure it's going to stay the same. I'm pretty certain it is. Oh, yeah. See, hell, it's way down here. It's all 1. Technically, it looks beautiful, but when I don't have the fundamentals and the sentiment in my favor, it's hard to get into it. But man, does that not look like a perfect technical setup? See? And it's going to work out. Sometimes the charts don't care. Sometimes they don't care about the fundamentals and the sentiment. Look, even when an asset is strong, like gold and silver, it still has to have pullbacks, does it not? Because you're still going to have inevitably profit taking. Even silver, guys. Silver's been going parabolic for how long? Quite a while. Let's do a 12-month chart. Look at this. Look at this crap. Look at 2025 candle. That big lovely green candle. That's your silver candle. And even so far in 2026, that candle there, the newest candle. Even in this parabolic move that's going to the moon, there's still going to be pullbacks, because there's a lot of people taking their profits, right? There's profit taking in here, profit taking here, profit taking here, profit taking this, since yesterday. Okay. So, man, that looks so freaking good too. There you go. See, this was the trade I was complaining about that I didn't get into. And again, you have a very good jobless claims number come out for the dollar. And remember, gold and silver thrive on chaos. So because that was a good thing for the dollar, people are putting their money into the dollar. So what are they doing? They're probably selling out their gold and silver. See, that's just interesting. It's always funny to see how big of a swing you get from one report to the next. Okay, talking about the Forex Factory or whatever site you use. Let's go to this week. Yeah, that's what it is. You get everybody's, and this used to be me. I used to be so fixated on whatever report was in front of me that day. So for today, for the example, the GDP report for the pound, unemployment claims that we just had for the dollar. Let me get caught up on the chat real quick. Oh, you got in on the demand zone yesterday. Beautiful technical play, Mr. Peeps, on that dollar yen. Hell yeah. That's awesome. I was sitting right there too, man, thinking the same thing. Oh, wait, that's not it. I was sitting here thinking, come on, computer. Why are you going so dang slow? Yeah. Yeah, well, and part of the thing too is I think it came down. Yeah, this was what I was looking at, was that wick right there. So I was up here in this area after seeing that it had hit that wick or hit the zone itself. Right in this area, I was thinking, man, I'd really like to smash the buy button, but I can't because of the overhead supply. So to me, for my trading style, it would have had to have been a limit order, because that would have been too quick for me to get in, right? Now down here would have made a little more sense, because this would have given me more time, but guys, it had already been mitigated, right? So I don't know, was there anything deeper inside on a small time frame? Let's go look. Go look over here. So we're on a 5-minute chart now. Yeah, I mean, this candle does have a gap, right? So that would have been a good candle, but I don't think we quite hit it, because it basically came into the zone just through this area. So yeah, it would have had to have been a limit order for me to get into that, because it didn't come down into some smaller time frame confluences. So there you go. There's a couple that have run off and left me. Okay, but the limit orders are probably enjoying their trade right now. You're obviously enjoying your trade right now, so that's good stuff. Yeah, I just am a little extra paid. Runway model perfect for me. So sometimes, and I miss out on a lot of trades like this. There goes my chart. Let me get that back up. So yeah, that's awesome though that you got into that. And now you simply know that you got this overhead supply just to worry about. Okay, because I could see this. Yeah, I could see price coming up, tagging in, and it should get some type of bounce downward. Okay, now how big of a retracement, who knows? Okay. But I would at least expect some selling, and then maybe it catches another bid and takes off, right? But maybe it hits that zone and totally reverses. So I would just be aware of that. Okay, make sure you kind of trail your stop loss up under this area or something like that. Just kind of trail it up. Start choking the hell out of it, right? You could use this swing low, obviously here. You could kind of look at this former resistance and kind of, put your stop loss under here at some point, just in case the retail traders make a stink on this area here. Okay. And then obviously as price goes up, just keep going up underneath these new swing lows and swing highs. Okay. Swing low. Well, swing low, swing low, swing low, swing low, right? Just keep riding it up. But there you go. You getting paid today, Mr. Peeps. 158.4. Okay, yeah. There you go. Good stuff. 4 hour zone. The 4 hour zone I'm charting, but there's a daily zone way above that. Maybe being greedy. You can never be too greedy. You can never be too careful or too greedy. Oh yeah, you're talking about the zone up here that I drew up. Yeah. Yeah, and just keep in mind, Mr. Peeps, that we are entering intervention territory. Potential. Okay, it's never a done deal, but we, at the outset of the show, that's what I led off with. If we go back, I mean, you just see where all these reversals took place. 159, 160. Okay. The last time actually got a little higher up before the Bank of Japan steps in, right? 161 half or 162 basically. Okay. So you just never know, but look at what happened. Bam, all the way down to 140. Same thing here. Bam, all the way down to 140. What was that, a 2,000? How many pips is that? 2,000 pip drop? That's a lot of pips. 2,000 pip drop. And I guarantee there's going to be, I promise you, there are people that have already started putting in a position trade to short up here, expecting to move back down to 140. Right? So interesting stuff. Very, very cautious. Yeah, just choke the hell out of it with your stop loss, your trailing stop, right? Be a good idea. I know I would be. No, I really was wanting to get in too, but yeah, obviously I didn't get the signal. And then obviously the Bank of Japan, they're sneaky devils. They're going to do their thing at some point and pull everybody basically, right? You want to talk about COT report? That's actually the best COT type signal you can get. Is dollar yen 160. So anyway, let's go back to our top setups here. Just to see how everything shook out. It's only been 15, 16 minutes since the report came out. Sometimes these reports take, I think, like half an hour, if I remember right. Half an hour before the top setups kind of recalibrates around the new releases. So we shall see what we got. But yeah, the Swiss pairs remain at the top. Now the Nikkei out of Japan actually popped up. So it's now a 7. Let's go look at that. I don't think we've looked at the Nikkei, the Japanese Nikkei in a while, have we? I know I have. I mean, I've done it a couple times on my own off stream, but there we go, down here. Okay, this thing's up at the moon too, right? Oh, that's a weekly chart. Let's go down to a 4-hour. Okay, 4-hour. What do we got? Well, we got a daily 4-hour demand zone confluence down here. Low trading volume, though, I got to admit. You had some pretty high trading volume on this big expanded range candle here, if you look at the red bar all the way at the bottom. So if we have the strength on that leg, on that candle, I have to look at the candle preceding it. And I can go play around on some smaller time frames. I mean, that would basically be your 4-hour zone where the volume spike started. Okay. So 4 hours. So let's divide 4 by 4. Go down to 1. That gives me 1, right? So let's go to 1 hour. Look at this area here. Okay. There's our 1-hour candle, which is basically almost the same size as the 4-hour. So that's pretty good confluence. I like that. And again, 1-hour candle. Look at that VSA. That's about as strong as it gets. And I'm sure that had to have, okay. So yeah, broke a structure here. We broke a few structures on this leg. I don't know how far back it goes. Yeah, back here. Okay, this was a double top. This was a double top at one time, right? There, and even back here, or it's at least a resistance point. So I would be drawing it up something like this. Okay. There would be your former resistance, and I always do blue dash lines. This is the backwards back testing type stuff that helps to give you odds enhancers, right? We're looking at November 25th, okay? November 3rd, I'm sorry. November 3rd resistance point. Okay, then we get November 3rd, and then we get this resistance point back here on just the other day, last week, last Friday, I believe. So a couple points of resistance. Then what happens? Okay, finally, this demand zone finally broke through the down to it. Now I have an alert set up here, which I'll get to in a second. Yeah, Never really thought about trading that, to be honest. Are you talking about the Nikkei? And I know I need to get my stream back up. Yeah, this is basically the worst I have to do. Just add, you share my screen 2 or 3 times, seems like every day. That's YouTube Studio for you. Yeah, you know what? And I never really got in. I never really considered trading the Nikkei either until I realized it was on the top setups. Okay. It's one of the assets that Nick built into his system. So got into it, started studying around on it, learned about this thing called intervention, found a couple cool websites on the past, on their behaviors in the past from intervention. So I just started looking at it and trading it. I haven't had any major trades because it's been in neutral territory for quite a while. Does it move very much? Let's take a look at the average true range to find out the answer to that. Okay, here's our average true range on a daily down here. So that's, yeah, I mean, it looks to me like, so that's 889. Hold on a second. So that would be, let me think. Let me think here. 889, 45. Yeah, it moves quite a bit actually. So that's so it would most closely be, it would be the closest to the Dow as far as the size. So Dow's 50,000 almost. Okay, the Nikkei is 54,000. Well, let's just call it 49,000 actually for the Dow. So the Dow being a $49,000 instrument, the Nikkei being a $54,000 instrument, the Dow moves 502 points on average per day. Okay, 502 points. The Nikkei, which is a $5,000 higher priced asset, moves 889 points a day. So it sounds to me like the Nikkei is definitely a little more volatile, just to compare it to something of similar value, right? It's definitely moves more. It's more volatile. The NASI, which is half the value of the Dow, okay, if we're just looking at the prices, it moves 345 points a day. The S&P, which is only a $6,900 instrument, moves 63 points a day. So yeah, it definitely moves a lot. And it makes sense because so does the dollar yen, right? So yeah, it's definitely very volatile. So it may not be for everybody, especially beginners. I'm just talking about specifically beginners, not you, Mr. Peeps, but yeah, it just might be something that, I always say it's like when you get your first car as a kid in high school, you get the old beater, right? You get the Ford Pinto, or in my case, an old Ford Fairlane is what I got. I'm sure mom and daddy ain't going to be giving you keys to a brand new Porsche or a Lamborghini, right? As far as the speed of it. So to me, I would think that the Nikkei would probably be a little bit more on the Porsche Lamborghini side of a vehicle to give a kid, right, when they get their driver's license. Probably not the smartest thing to do. That's just the way my brain works. I could be dead wrong on that, but I would think a brand new trader would want to start off at something a little bit slower, at least initially, like the euro pound as an example. This thing only moves about 30 pips a day. Damn, this thing's dropped even further since the last time I looked at it. 30 pips a day, guys. Remember, the dollar yen moves 120 pips a day, but the euro pound only moves 30. Okay. Euro yen, it's another one that moves quite a bit, 95 pips. Dollar yen, let me get it up to date. Oh, dollar yen is actually down to 95 pips as well. Okay. So it's gotten quite the decline. Yeah, see, it was up here in the 120 pip range, but anyway, it's down. End of year blues. End of year blues. Yeah. Which big ass candle was you talking about? The Nikkei? I think. Sorry about that. I just realized I lost my stream. Yeah. Just lost my stream there for a minute, it looked like, but we are pretty close to the end of the stream anyway. Basically only had 2 minutes left. So anyway, yeah, I might as well just, well, yeah, real quickly, just to finish this thought, since I do have another minute and a half. Yeah, just to finish this thought. So I don't have any interest in trading this zone unless we go to that 3 units first. And even if we do that in return, did we really have that big of a volume push on the leg out? Yeah, I guess it did kind of double up. I mean, it's not really like it was a big candle like these yellow candles over here. So yeah, I don't know. I think I'm probably just messing around with fire on this. I am going to watch it because I'm basically looking at it on a smaller time frame as well. Okay. Got a 15-minute demand zone. So this picture makes it look a little better with a pretty decent volume candle coming out of it. Okay. So this ultimately is why I have this alert set here, so that it can alert me of the higher time frame zone. But again, it's not a zone on a higher time frame unless it breaks structure and goes 3 units. But when we look at it on a 15-minute time frame, this is a pretty picture, because now I'm looking at this candle right here only. Gap up. Yeah, it did cut away some of that gap, which is kind of a bummer, but it did move up, broke some structures on these smaller time frames, returned to price on this specific candle, and this would be my potential entry. And I'm just going to leave it a light yellow for now, just so I know it's, in the works, in the progress. So anyway, that's pretty well, I think, the end of my stream. Sorry about that minute or two. I lost you there for a minute, Mr. Peeps. But I'll be back tomorrow. And hey, have a wonderful day, my friend. Bank of England at 4 a.m. Central Standard Time. That is the only red folder event that we've got coming up. I don't think even with an orange folder event. Yeah, see, we don't even have any middle impact events. So it's basically just that. A little bit of a lip flapping session. So today is all about a happy day for the U.S. dollar, since we did break the 200,000 unemployment claims to the bottom side of that. So we'll see if that dollar can carry into some strength for some, 5-minute, 10-minute, 15-minute demand zone trades for the day and tomorrow potentially. So we'll see what we got. But with that, that's all I got for you. Have a wonderful day, Mr. Peeps, and everybody else. And I'll see you tomorrow, my friend. Later.